Hey everybody, welcome back. Sive is here with the Forex Peace Army.com. Let's return back to the analysis of the gold. Yesterday we explained in details why a gold market behaves different, why it is more bearish than the euro currency. Actually the reasons stand with background. So euro currency has a bit different background. It also performs not really strong. Today in a video dedicated to the euro, we talked about this and discussed nuances that exist on the market. But on a gold market, everything is going with the suggestion that we have made yesterday. So we talked a lot about the bearish signs, why market currently has more chances to just keep dropping to the 44. And actually now you could see that market stands on the way. Here market has confirmed our suggestion of the possible reversal swing. Suggest market dropped, closed below these lows, but not only this one, but almost all the previous 3 sessions. So actually, and currently we suggest that it should proceed to the 44. The question is only in the shape how it might happen. On the 4 time frame chart, you could see what's going on. So actually, all the red lines that we have set yesterday for the market, now we are broken in down, and actually you can see here is the border of the triangle where market was forming this potential reversal patterns, trying to show something bullish, to show the upper direction, but now it is totally failing. It was not able to complete its target, drop below neckline, close the gap, drop below the lows of the close of the previous week, and now it's keep dropping. So in general, with this MACD showing upper direction, here was mostly flat sideways performance, which indicates the possible bearish dynamic pressure. It suggests the drop out of the lows. So here's at some point market should drop lower. So mostly everything has happened as we described yesterday, the bearish scenario. So all confirmations now have been done by the market, and actually we are waiting for further action to the downside. The options that actually market has also on the hourly chart, I just show you the one possible options. The first one is of course just straightforward downward performance. So it just could take now the lows, drop out here, and complete the target that we have. Triangle that we specified yesterday now has been broken. The line already has been retesting, and market now is accelerating down. So the only thing that theoretically might happen, for instance, if market would try to show some meaningful retracement here until it will not break down these lows. So in this case, potential shape of the butterfly is possible. It doesn't change the target. Mostly it will be the same, but it could provide good opportunity for taking the position later, if this will happen. Because right on the bottom, you can see here is also minor butterflies forming. You could recognize it probably if you drop your time frame to the 50-minute chart, but even on the hourly chart, you could see that we could identify it. And for example, here, this will be completed. Market could try to show some minor head and shoulders pattern, for example, showing the minor pullback, which could become the part of the big butterfly and starting of the right wing of the butterfly. Maybe even retesting this broken line. It's called market very often does this. So in this case, yes, maybe we consider another chance for a position taking a bit later. But for now, it seems that, well, it also could just drop here and keep going. So as a bottom line for a current situation, we could say that market looks bearish. We do not have clear bullish signs and reasons actually to consider taking a long position. That's why we just, those of you who already have shorts, probably you just could keep them, just control your stop orders, move them to the break even as soon as possible. For those of you who have no position currently, I think that the only way to possess yourself for possible downward action is to wait for a butterfly scenario, because taking the position right now, it's a bit risky. You will have to place a relatively far standing stops. If we will not get it, well, that's okay. So in this case, we will start watching for something else. But if the butterfly will be formed, we consider it. The aggressive type of action that theoretically you could try to use is the placing of the stop sell order around 44.55 area. In the moment of the breakout, you could get filled with the stop selling order here, and if there will be no trap and market really will keep going lower, well, you will get good position. But always when you're using the stop entry orders, aiming on the breakout, it always carries significant risk. So I talked about this every time, and that's why I call it as aggressive style. It could bring really great fruits. You could place relatively tight stops, but the risks of the wash and rinse of the lows and some pullback is really significant. So it's not suitable for everybody, but this option also exists. So probably that's all for now that we could say about the coal market. Just let's keep watching. The next interesting situation that might be developing probably will stand now already 40-40. So the market will complete it.